Good morning. You're watching a home broadcast of Business World Live. I'm Danny Laurel. It's 10:30 a.m. this Thursday morning in Manila. We are about an hour into our shortened trading day. Let's go straight to our top stories. Companies may still have to pay corporate income taxes or CIT worth 30% beyond July, as the proposal to lower that tax to 25% by next month is now unlikely. Senate President pro tempore Ralph Recto said the chamber prioritized other measures over the Corporate Recovery and Tax Incentives Enterprises Act, or the CREATE bill, which seeks the immediate reduction of the CIT by July. Recto said the Senate focused on the Bayanihan 2 bill. The CREATE bill is the revised version of the CITIRA. CREATE now provides for an outright 5% reduction of the CIT to 25%, as well as flexible tax and non-tax incentives from investors. Finance officials hope the new tax scheme would take effect by next month as part of efforts to stimulate the domestic economy, which has been heavily battered by the COVID-19 crisis. The Department of Finance has estimated that foregone revenues from the new scheme would amount to over $625 billion in the next 5 years, but the agency says these foregone revenues will allow businesses to continue funding their operations and keep their employees. Congress is adjourning this week. Now, over in the lower house, Ways and Means Committee Chairman Albay Representative Joey Salceda said they would await word from the executive so they can tackle the bill in a special session. The DOF said it may request for a special session for the passage of the bill, but Senate President Tito Soto doubts the measure would be discussed in a special session. He said they only have until June 8 to hold any session, as the Constitution prohibits the Congress from holding any sessions before the opening of the next regular session. Congressional sessions will resume on July 27th. Meanwhile, the Department of Finance is now bent on imposing value-added tax or VAT on the digital economy. Finance Chief Sonny Dominguez said they would just wait for an international consensus on cross-border digital transactions before they can consider taxing that industry. The United States has recently launched an inquiry on digital services taxes, which are being considered or imposed by the United Kingdom and Italy on platforms such as Facebook and Google. Secretary Dominguez said a digital service tax would come on top of the 12% VAT on online transactions, which the Department of Finance is now studying to plug VAT leakages. The agency hopes to raise 14 billion to 17 billion pesos from VAT charged on online transactions. Okay, kicking off globally here in terms of our markets, let's take a quick peek at my terminal and how we are doing, at least from a global perspective. Let's kick off with the Americas. I mean, things seem to be getting better worldwide here. You've actually got the global stock rally extending into today, so Thursday, on the back of Wall Street also gaining overnight. You can see here on my screen the Dow Jones index up by more than 2%. The S&P 500 was actually the highest in the past 3 months. You've actually got investors all over the world clinging to optimism for a speedy recovery economically from this pandemic. Globally, you've got financials, automotives, durable goods, manufacturing rallying across the world. You've also got U.S. Treasuries. They retain declines. Analysts have said that investors have now moved away from safe havens and have more of a risk on appetite. You've also got the U.S. having private payrolls showing fewer job losses than was actually forecast for the month of May. So some positivity there. You've also got Susan Schmidt from Aviva saying we will continue to see support for the market. Investors now believing there is light at the end of the tunnel. If you take a look at Europe, also a bit of a rally there from the FTSE to the Euro Stoxx 50. The ECB is also expected today, that's Thursday, to boost its rescue program. Additional 500 billion euros expected in stimulus. You've got in Dubai malls, private businesses fully operational since yesterday. France has also opened restaurants, bars, and cafes since June 2nd. Meanwhile, in Asia, let's take a quick peek at Asia Pacific. Indonesia also reopening, or planning at least to reopen the tourism sector for the locals next month. You can see on my screens here a bit of a mixed picture for Asia, but mostly tilted towards the green, let's say. So Asia market still percolating here, and we're going to be checking back on that later on. Meanwhile, I do want to highlight that our local bourse is extending that rally. Take a look at that. We are closing in on 6400. We've breached 6300. We are at 6379.17. That's up by 2.1% in just this first hour of trading. Recall, this follows a very hefty uptick of 3.7% of a gain on Wednesday. That was a 6th straight day, the longest rally we've actually seen in the past 2 years. And I just want to show you how the 1-year chart looks like here. You can see that we are in the right side of my chart. Actually, we've already breached our lower 50-day moving average here. That's the pink line. And we are crossing over into the green line, which is the 100-day moving average. So a lot of bullishness here. Of course, still a lot of risks on the table. But Claire Alviar of PhilStocks is noting that optimism is now evident. There were very high turnovers on Wednesday, around 8.3 billion pesos worth of trades, showing higher investor participation. And this even as foreigners actually went back to being net sellers. So unfortunately, after a 3-day streak, there were net outflows of 330 million pesos. But Manny Lisbon of PNB says, please be cautious because we might actually be seeing some profit taking to happen at such levels. Claire Alviar of PhilStocks saying the same thing. The fact that there has been net foreign selling again might show that this rally may not be sustained, and she's even bracing for profit taking to be happening today. Now, I do want to take a quick peek at which ones are our leaders and laggards here. You can see on my screen here how that is moving. GD Capital leading the charge up by 8%. But you've got a mix of Robinson's Land, for instance, so property companies, but also just conglomerates and banks leading the charge. Whereas PLDT is sitting out this rally down by 2%. But you've got yesterday. I just want to highlight how yesterday happened and how these stocks are performing today, because it was very evident that a lot of the leaders on Wednesday were really related to the reopening of the economy, particularly restaurants and malls. So interestingly, you had restaurants and mall stocks surging. Jollibee, for instance, up by 5.2% yesterday. Max's Group as well, climbing by 7.7%. Shakey's Pizza, Alliance Global, one of the leaders, they of course own McDonald's. Now also Ayala Land, which has of course malls and SM Prime. This as the government finally allowed dine-in at 50% capacity in areas under a modified GCQ. So again, not the GCQ, so not here in Metro Manila, but in a lot of other regions, they are now allowing people to start eating in. But what is it going to be looking like? Just as an idea, these from guidelines from the DTI, you're actually allowed to have face-to-face seating, but there will be dividers and 1 meter distance between the tables. Plus, you're going to be having a lot of single-use food menus per table and no contact with the person taking your order. You will actually be writing down your order via check boxes, and as much as possible, it will be contactless. So new normal in eating out in restaurants. Now, guess what else is hoping to come back today? That is gambling. Not today, sorry, in the near future. That is gambling. This is as PAGCOR is seeking to reopen their casino. So they're saying that a lot of the funds, of course, that casinos make end up in PAGCOR. Okay, they get a percentage revenue of that share, and this share is actually given to the government to support a lot of projects. So in particular, a lot of the sports related projects are funded by PAGCOR, but even just social assistance funds, 50% of the revenues even go to the treasury. So a lot of these are being halted right now because of the fact that casinos are closed. So they are calling for a reopening of the casinos. Recall that PAGCOR's net profit dropped close to 50% in the first quarter because of the lockdown. And that, of course, affects the rollout of a lot of our government social amelioration projects. Now, another thing and last thing that I want to share here is the reopening of flights. And that did happen, or that was about to happen. That will be happening tomorrow, June 5th. So this from Transport Secretary Artugade, the resumption of domestic commercial flights now approved by Secretary Carlito Galvez, although still very limited to GCQ areas only. Okay, so they will also need to verify with every LGU if they can land there PAL, for instance, will now have flights from NCR to Cebu, Davao, Dumaguete, and Cagayan de Oro, and also some international flights. AirAsia as well. They had, planned to make it a bit earlier, but now it's going to be moved a little bit by June 8th, but still very exciting here. They did highlight, however, there will be no leisure flights just yet. Okay, so there will be commercial flights, work related or essential services related, but no leisure flights just yet. So a lot of things going on here as our markets percolate, and we'll try and check back in on that later on in the broadcast. Okay, so still on that news, that the airlines are now opening, that is, of course, some good news to look forward to, especially in our battered tourism sector, which has been one of the worst hit since this pandemic started. In fact, the DOT said the inbound tourism revenues for the first 5 months fell a whopping 60% to 81 billion pesos. The Philippine Star reports that international arrivals also dropped by more than half to 1.3 million from 3.5 million last year. The United Nations World Tourism Organization earlier said a decline of as much as 78% in worldwide visitor arrivals is also expected. An official at the Asian Institute of Management, meanwhile, thinks the recovery plan being crafted by the government should include firms that have no option but to exit the industry. Maria Cherry Lynn Rodolfo, an advisory board member at AIM, said weaker links in the industry should be assisted if the country wants to tap them later on and strengthen the Philippines as a destination. Health officials said the country's response to COVID-19 has improved based on metrics like the testing capacity. However, local hospitals are currently under pressure due to rising costs and a sharp decline in non-coronavirus patients. Now, speaking at the Business World Insights Forum yesterday, Health Undersecretary Maria Rosario Verger said that the country now has the overall capacity of running 34,000 tests per day, which is a huge increase from the 300 tests when the pandemic started. Now, despite this good news, Makati Medical Center Medical Director Saturnino Javier reported that they are now facing issues of declining occupancy and admissions because of the postponement of purely elective procedures. That's also on top of having higher cost of services due to the need to use more PPEs. Javier added that their patients can't seek consultation because the doctors' clinics are currently closed. To deal with this problem, he said that the hospital is currently trying telemedicine as a form to connect with their patients. The lower house approved less controversial bills this week before taking a break. This includes the measure allowing the transfer of banks' bad loans to asset management companies or AMCs. The chamber voted to pass this financial institution strategic transfer, the FIST bill, in anticipation of a spike in non-performing loans amid the COVID-19 crisis. This measure seeks to boost banks' liquidity so that they can continue lending, and under the bill, financial institutions can sell non-performing assets to AMCs, which can then restructure debt accordingly. These transfers will be subject to a 50% applicable registration and transfer fee, the 50% of filing fees on any foreclosure, and 50% of land registration fees. The FIST bill also provides that any loss incurred by financial institutions as a result of the transfer of NPLs will be treated as ordinary losses subject to pertinent laws. Some lawmakers who rejected the bill are concerned that the measure will not guarantee protection for SMEs. Gabriela Party List Representative Arlene Brosa says the scheme socializes financial risks instead of ensuring financial resiliency. She added that the bill gives FIST corporations more power to control bank loans and rental rates, which may translate to higher rental rates for Filipinos living in condos located in business districts. The House Committee on Banks and Financial Intermediaries defended the bill, saying it is the price to pay if we want to keep banks afloat. For Union Bank, going digital was a big and bold bet during a time where brick and mortar was expanding, cash remained king, and the internet infrastructure here in the Philippines was touted as one of the worst in the entire region. But that bet more than paid off when a pandemic halted movement. And here to share with us some updates, we have with us Union Bank's Chief Technology and also Chief Transformation Officer Henry Aguda. Good morning, Henry.
Morning, Danny. Hi. Morning,
So good
everybody.
to see you again. We've talked about this just last week on the Lightstream 8 webinar, but now it's time to update our viewers here on what your new strategy is. Now, the last time we met, I visited your headquarters, and you guys toured me around. It was still such a big bet. You were rolling out things like depositing checks from the app, and you showed me how it worked when you did video conferencing with all your different branches, and that was all centralized in your head office, and you hadn't even recovered the capex that you guys are spending on it. How does it feel to be one of the most prepared right now, actually, when this situation hit?
Well, Danny, last year when we were talking, actually, the gains have been coming in. So even prior to the ECQ happening, as you know, last year we showed, I guess, one of the most profitable years of the bank in 2019, and we have never enjoyed such a high financial performance before. And actually, that's a good thing because last year has given us the momentum to endure this year. So on the digital front, I guess the capex that we've invested have fully paid for itself.
Okay.
The ECQ actually took it to a new level. So last year, we were able to onboard 1.3 million new customers for the bank. And that is largely because of our digital infrastructure and our ability to service our customers very well. This year, just during the 2 months of the ECQ, we onboarded close to about 160,000 customers. And that accelerated actually the adoption of our products by the banking community. So it's paying off. It's unfortunate that it has been highlighted during these trying times, but our CEO would always say, fortune favors the prepared, and Union Bank has prepared for this for about 3 years already. We didn't anticipate the pandemic. We did anticipate other things like the usual disasters that come our way: typhoon, volcanic eruption, earthquake. But this situation just takes it to a different level altogether.
Yeah, Henry, I mean, there was already a lot of challenges in rolling this out without a pandemic, diba? I mean, getting people to change their behaviors, getting people to use their phones. Have you seen what challenges have you seen in this period? Were you able to meet that demand, that surging demand and traffic during this time? I mean, it's one thing to digitize the existing customers, and it's another thing to be servicing completely new clients that have not been your previous clients before.
Yeah, well, a lot of people, even last year, and I think you've heard of it, a lot of the banks complain about the internet situation in the Philippines and how we don't have the necessary data infrastructure to become digital. We in Union Bank, we never believed that. We feel that while there are improvements that need to happen in terms of our internet services, we feel that it is sufficient enough in order for us to get people on the digital rails. So surprising, during the ECQ, the mobile broadband that our customers use, the home internet services that they use are more than enough to do digital banking. So what it enables them is to do almost all of their banking requirements from home, and they never have to go to the branches to do those transactions anymore. So imagine, from account opening to depositing checks, to investing in instruments, to even applying for credit cards and other services. You can do that now with the infrastructure that we have. So I guess this just proves that you can always complain about challenges, or you can do something about it. So Union Bank worked with a lot of our telco partners, and we worked with a lot of them. in order for us to provide this digital infrastructure that our customers can avail of and enjoy.
But you were preemptive, no? You were ahead of the curve. So even before people were wanted to jump on board, you had the platforms already in place. What do you feel about the rest of the network? I mean, were businesses ready? And we were talking about it offline, but even just disbursing the funds to the poorest of the poor from the government, they tried to tap institutions to do it in a cashless way kasi nga, it's so hard to give cash to everyone. But at the end of the day, they needed cash. Because you cannot be going to the supermarkets using all digital and buying in the sari-sari stores, diba? So maybe you are ready for this shift, but is the rest of the country ready for this shift?
So you need to bridge the digital payment infrastructure with the current cash payment infrastructure. And my answer is yes, we're getting there. And I see some of the efforts that are being done by government where they try to do digital mixed with over-the-counter cash disbursement. For Unionbank, that is exactly what we did. So while we have we can do purely digital fund transfer, we understand that especially in areas in the provinces, people still go over the counter to get cash. And so what we did was we launched a program that allows us to provide our customers the ability to disburse cash in 11,000 cash remittance centers. So what happens is you download the Unionbank app, you fund it from a checking account in another bank and disburse it to beneficiaries, and they can get the disbursement in either Cebuana, Perahab, Palawan Express, LBC. So you have to bridge that because as you said, not everybody's still digital. But the nice thing about it is we noticed that during this ECQ, we onboarded close to about 30,000 SMEs and companies. So they are feeling it. They know that they need to go digital and they need to be paid digitally as well. So it's just a matter of them navigating through what is available out there and signing up to digital services.
Okay, so it's still a transition period, but eventually we might be getting there, hopefully. Now, you were talking about regulation earlier on. Luckily, we had, all of these, the PhilPass in 2018 passed, and also Instanet and Pesonet and InstaPay ahead of the pandemic. Buti na lang. How do you expect regulation to be changing now, especially as we are expecting a huge amount of increase? There were a lot of concerns on the fees before, and the BSP had tried to level that off, tried not to put pressure, but now there's talk of digital tax, there's talk of these things becoming more expensive. And shouldn't it be cheaper for customers if you go digital, diba? But now there might be issues on that actually becoming more expensive.
Well, actually, the BSP has seen that, and they saw that, and they validate the notion that if you go digital, your cost structure really goes down. That's why I think NBSP is doing this. More and more, they're becoming more liberal in terms of bringing down the fees. For example, NRPS, Pesonet, and InstaPay, during this time, you can transfer without any fees. And from the banking side, from the providers, we see that it doesn't cost us much if you do transfer to those rails. So, you may argue there won't be any fee revenue out of fulfilling the transaction, but then again, you get revenue from all the other banking transactions like loans and liquid investment instruments. So, I think moving forward, the BSP will encourage most of us to do digital payment. I think there's a target of about 50% should be digital at a certain point in time, and that's a good track. And it's been proven in other countries that have adopted digital payment that commerce improves when you go digital. So I think more and more the banks will start going to the digital rail. And the only challenge they have right now is you cannot do digital transformation overnight. While they see the need, they have to really invest in the money and time to do the transformation properly. Because you don't just wake up one night and suddenly you're digital, right? So that's a challenge of the other banks.
I'm sure you've learned a lot on what is worth spending for right now, and what was maybe not, what can wait and what doesn't need to be spent for, because you had a very ambitious plan ahead of this pandemic. Are you going to be shelling out more on cybersecurity, given the fact that there might be more cybersecurity attacks now, and people, are you shelling out more on work from home, of your employees to be able to roll this out? What are you looking at? You were also very vocal on using blockchain as a technology, which is also a very expensive undertaking. Are you still continuing on that path?
Okay, so for on the investment side, so early on, maybe even beyond 3 years, we've decided that our capex will be spent on the digital assets and not on the branch network. So you have two schools of thought. In order for you to generate CASA, either you build a huge branch network, brick and mortar, or go digital. And we realized that spending on the branch network would be, first, very, very expensive. And second, seeing that the trend nowadays where a lot of banks are closing down their branches in more developed economies, we feel that that's not going to be sustainable. So the capital expenditure that we would have spent on brick and mortar branches, we moved to the digital space. And it's not as expensive as the capex relating to building branches. So in the digital space, work from home, cybersecurity, even prior to the ECQ situation, we've been investing in it incrementally over 3 years. So there's really no marked increase in capital expenditure this year because of work from home, because even before this year, we've been preparing for work from home. All our employees have their company-issued cell phones with data plans. They have laptops, because we've decided early on to change the desktops to laptops in preparation for workforce mobility and the ability of our people to work anywhere, and most especially from their homes right now. So I guess the investment that we've put in years ago have been paying off. So there's no marked increase in capital expenditure this year. I guess we're just making sure that we maximize the investments that we put in. Now on cybersecurity, it's more about interfacing closely with the authorities. There's a story during the ECQ where during the first 2 weeks, there's a marked increase in cyber attacks, from phishing to scamming, etc., and identity theft. But the banks got together. We have an organization called the Bankers Association of the Philippines. We got together and coordinated with BSP, NBI, and the Cybercrimes Division of PNP. And on the third to fourth week of the ECQ, we noticed a marked decline in hacking incidents. And this is where it's not all about putting in money. It's about coordinating with the community. So that's how we are approaching our cybersecurity posture right now.
Okay, so not about the technology in place or spending on that, but really just coordination. Henry, before we let you go and end this broadcast, I don't know if you can project the future, but you had a pretty good first quarter.
Yes,
And actually, your head said that they were happy with this. What will the rest of the year be looking like? Will all of these digital, shift actually make up for the fact that there will be, of course, an increase in loan defaults? There will be softer demand for consumer loans, retail loans, as people feel burned in their pockets. General asset quality pressure here. How are you seeing the rest of the year?
Well, it's evolving. Definitely in the past few days, like your earlier report, the stock market is recovering. People are now getting into a more positive view of the things ahead. I've seen also, I'm encouraged by the fact that the government are responding accordingly. You could argue things could improve, but then we process a lot of the subsidies from SSS to our account holders, the SBWS, and they're proving to be useful because we noticed that a lot of the SMEs are now picking up as well. We're onboarding them in the digital rail. So the future as it is now seems to be headed towards digital. The overall economic prognosis remains to be touch and go because we don't know how we're at the mercy of this virus. And while things are positive right now, and hopefully they continue to do so, we don't know when it's going to change. So me, with all indications, if we go along the path of the trend that we're seeing right now, our branch transactions are 36% higher than before, than during the ECQ. Backroom transactions showing that it's going back to normal. So I'm more hopeful that things might go to the new digital normal soon.
Okay, so the new digital normal, and of course, congratulations with everything that you've managed to achieve in these difficult times, and hoping for things to continue on a sustainable path. Thank you so much. That was Henry Aguda, Chief Technology and Operations Officer of Unionbank.
Thanks, Danny. Good morning.
And that's the first look into our business day. Today is